let's jump right into this, Guy Adami, because it looked like we would carry through Monday's momentum. We did not. Do you have anything you can put your finger on to say this is why we rolled over?
Yeah, pretty much everything we've been talking about for the last couple of weeks, Brian. I'm not trying to be a wise guy here, but since that low we made a few weeks ago, and as it became somewhat clear the bounce was in play, we had been saying for quite some time that the logical level for this thing to bounce was 2790 or so in the S&P 500. We came within a little more than 1% of that today. So in terms of what it did today, again, I'm not trying to be funny here, but it really didn't surprise us all that much because it did exactly what it needed to do technically. Traded up to that level, seemingly failed. That's a 26% bounce from that low. The VIX never really gave up at the GOAT. VIX closed higher today. You mentioned that oil rolled over. So, I never thought this was going to be a straight line higher. It made a lot of sense to get where we got today. And I think in terms of the rest of the month, and I'm not trying to speak in hyperbole here, but I think the next 2 days are very important for the market.
Why is that, Tim Seymour? And do you agree with Guy Adami?
Well, first of all, he is a wise guy, so I do listen to him. And I think when you consider some of the levels, what seems to be the most expected outcome was that this market was going to do what it has done so far. And I want to get out there and say that I don't know it has to do what everybody thinks it's going to do. And I feel like I've been saying that, which is that double retests, checking the VIX to what it did in 2008 and 9 after it fell 50% and then hit people in the face for 85, 90% before pulling back and offering some safety, but not until we made fresh bottoms. So I think, yes, very important couple days. Also very important couple days because of the concept of containment and what's going on in other parts of the world where we might be getting that preview into, okay, so we don't really know where the global economy is going to be. We don't know where U.S. unemployment is going to go. We don't know where credit's going to decelerate to. We know that the Fed has done everything they can and essentially bought everything they possibly can by the second. And we now know that at least there are parts of the world that are getting on with it. And clearly, we don't know whether there's going to be a rebound. And I'll leave the health issues to the health experts. From a market's perspective, that's what prices you to 27 to 2,800 on the S&P points. And that's what I think is what we've done. So to answer your question about Guy, I think Guy's pointing out that people kind of expected some of this bounce. I don't think a lot of people expected it to be this extreme. And my view is I don't know that we have to retest the lows. I think we can consolidate a bit here, but I think the economic impact is something we're still waiting on.
Yeah, and Dan, Nathan, I'm going to read a stat here that I came across today, and it's from Baycrest Partners. I think this is really interesting. It kind of goes to what you were saying yesterday. Monday was the 32nd time in history that the S&P 500 gained more than 7% in a day. 22 of the 32 occurred between 1929 and 1933. Obviously, we're not saying there's a depression coming, but those are not the 4 years that you want to have these kind of statistical similarities to.
Yeah, no doubt about it. I mean, Karen said some interesting stuff last night to me that I gave some thought to after I had a little bit of a tirade there. I mean, she said that she would have felt more comfortable about buying the market yesterday if it was more flattish than up 7%, which I thought that was really interesting. And I think what she's saying is that she'd like to see the volatility settle down. And so, Sully, your data that you're showing, those 22 times that the market had 7% rallies or greater was during the Great Depression after the biggest crash in the stock market history at that point. Yeah, we don't really want to be compared to those things. We want to see things settle down a little bit. I know that a lot of strategists and investors, big-time investors that have been on the network are feeling pretty decent about the fact that the credit markets have kind of settled down a little bit, that at least the stimulus from the monetary front has done that. So it would be great to see the stock market settle down a little bit. I would add to Tim's point that it seems like everybody is convinced that there will be a retest of the March 23rd low, which makes you think, okay, maybe that's not the case. Mike Wilson just said it on the closing bell. I saw in the halftime, Tom Lee doesn't think that's going to happen either. So there's some smart people out there saying that that's not exactly the case. The way I see it is, and like I said last night, it's going to be a time thing. We have a range now. The March 23rd low is 2,200, and then we have guys 2,790 to the upside. That's the range. If we get through either one of those, we're likely to see momentum in either one of those directions. I just happen to think we're going to retest in the next few weeks or months to the downside.
Okay, watching them. By the way, Dad, don't be hard on yourself. I've been watching you and Melissa the gang for years. You've had far larger tirades than you had last night. Don't be too tough on yourself. Karen, on a serious note, I feel like we're trading on some of the data from obviously the virus. Some positive data over the weekend. We had a nice big day yesterday. Unfortunately, we got some very negative data from New York today, and it feels like that's rolling over. Do you feel like that data is impacting the numbers in the market, the ones that we watch every day?
Well, I think, we clearly trade off Corona. I thought that actually the death number was higher, even talking about that statistic is very odd, but which is sort of a lagging indicator. And new cases, I think, is hopefully starting to flatten out. So you can sort of maybe see the light at the end of the tunnel a little bit. But for me, I don't know where the light is at the end of the tunnel for the economy. I don't think we've even really begun to see how dark that can be. And to Dan's point, on the VIX, actually all the guys talked about the VIX, I think, like today, the market essentially was flat. I would much rather have had a flat day and then had the volatility index come down a lot as opposed to actually up today than this kind of action. This, I'm long, that's what we do, we're long investors, and so this is a really difficult market to trade. I'd much rather buy things when they're down, not when they're just all over the place. So I think until we get any clarity on the economy, and I don't know when that'll happen, we might start to get a little hint next week. We'll hear from JP Morgan. That'll be really important. We'll also hear from Bank of America, which is really important. They probably have the best sense out there of anyone of what are consumers doing? How do they feel? How do they feel about their money? Are they spending? How do their balance sheets look? That'll be really interesting to hear, but it'll only be through March 30th. So we're not going to see, I hope they have some commentary on what they're seeing since then, but we don't have any light yet on where the economy is going to go. So that makes me somewhat nervous.
It's a lot. We don't know about how a lot of things are going to go. And Guy Adami, the Institute for Health Evaluation and Metrics, which is sort of the official estimator from University of Washington, thankfully lowered their estimates from hospital beds and fatalities just about 2 hours ago. Brought it down by a lot, which is great news. One is too many, but bringing that number down is a lot. The market either didn't see it or didn't seem to react to it. The reason I bring this up, Guy, is that obviously with the human tragedy going on, everybody right now ultimately is just sort of guessing. Are they not?
Of course they are. A lot of it, when you say guessing, you're guessing off hopefully years of being in this business and trying to look back and trying to evaluate what you think is going on and what you think might happen. As I say all the time, I just have opinions. I don't know what's going to happen. Quite frankly, nobody does, but we have a wealth of knowledge I hope we lean on. But let me just say this quickly. When the market reached its all-time high in the S&P, that 3393 level, if you assume, let's just say, I think the consensus number for earnings was about 160 or so dollars, market was trading at 21 times earnings, 21 times earnings, which is a little bit rich. So the market was rich in the first place. You're going to get nowhere near 160 going forward. And quite frankly, I don't know in the near future when we're going to get anywhere close to that, aside from which the valuation, the multiple, I think, is wrong. So you have to start doing the math. Now, a lot of people think there's this huge pent-up demand on the back end of this thing. I hope that's the case. And obviously, I hope this ends sooner rather than later. I just don't think that pent-up demand is going to be there. And I think this takes a lot longer. So I'm more in Dan's camp on this one.